So one of the main reasons why I'm invested in Palantir is because of a commercial business. I believe Foundry is a revolutionary software that may be ahead of its time. And maybe Foundry can fail. I don't bet on that, but maybe it can. And why? Why could Foundry fail? Why could companies not pick up the software? Well, there's a few issues with the way Foundry approaches sales of its software. For example, Palantir is selling software like it's 2005. They sell top-down software. They have a sales team, and it's millions of dollars up front. They don't have a free version of the product. You can't test the product. So there's issues with the way Palantir is selling the software. The modern way of selling software is really more of a bottom-up sales approach where companies can sign up and try the product. That's more successful today. That's what Snowflake has, and other companies that are often confused with Palantir. So the way Palantir sells Foundry, I think, is not optimal for most commercial businesses today. Risk number 2, I think, is Alex Karp. Alex Karp has a style that may not resonate with today's CTO, right, who's likely Silicon Valley educated or related in one way or another. And I'm not sure, for example, the video that came out of Davos where he said, a CEO from Korea, he said, our product is very expensive. I'm not sure that's a great marketing pitch. I mean, maybe it's an okay marketing pitch, but I'm not sure it's a great marketing pitch to say that. Maybe it is. It's a risk. It's another risk. Like the marketing, again, they need to do a better job at that. And especially risk number 3, I think, is more important. I think some of the bigger firms of the world come out of Silicon Valley and they want nothing to do with Palantir. And many of them have said that they want nothing to do with Palantir. And that is because of the government business. And that's why Palantir, for example, moved to Denver early on. That was because of that government business and some of the backlash that they've had in Silicon Valley. So to summarize this slide, I do think Foundry will succeed, but there's risks with Foundry, and Foundry may fail. Foundry could fail. But is Palantir investable just for its government business? We don't talk enough about the government business. And why do I ask that? Why should one actually be perhaps a little interested in the government business of Palantir? Well, because Gotham is literally a monopoly. It's the undeniable fourth contractor in the U.S. defense industrial complex. Per my qualitative analysis of the sector, they are undeniably number one, even though we know little about Gotham and we know little about the military business of Palantir. Why ask? Why ask if one could invest in Palantir just for government? Gotham is 15 plus years old. It's a proven leader. It's a proven product. The product is well known in the defense and government communities, and it's still growing at a very, very fast clip compared to other military contractors. And why ask number 3? Well, the defense business, and this is why I think we should be interested, if Foundry fails, if Palantir's commercial initiatives fail, which they could, SaaS companies fail. If they fail, Palantir offers us a margin of safety, a sufficient margin of safety in the government business. So while I'm interested in hyper growth stocks, and I would not buy the stock if it just had the government business, I believe that the defense business of Palantir actually provides a value stock floor, or provides a bottom for this stock, because they have more than half of their business that is very successful with government. I believe this stock has fallen too far and is actually undervalued, mostly because of the government business. It's hard to see Palantir ever go to zero or ever go to, say, the level of a penny stock, because it has a successful government contractor business. And, a government contractor, when the government is the surest source of funds. Like it's the best customer one can have. That's why the valuation of a lot of the defense companies is so high, and the market gives no credit to Palantir for its government business. So let's talk about the government business just a little bit and talk about what Palantir does. So the way the government business works for Palantir, it's mostly the foundry called the platform called Gotham, and in the US they tend to call it Titan, and it's installed in so many US military, be it Army, Navy, Air Force, or even Space Force. They have a lot of contract with that new branch of the military, and what they do is they simply connect all of the databases you can think of in a software that does real-time monitoring of everything that's happening, and that does recommendations as to what's the best course of action. And it brings all of these disparate sources of data together, and it has a map of the world and maps in a geospatial way all of the events that are happening, and really it has been credited to a lot of competitive advantage given to the US military. So here's what they say, for example. Palantir has a long tradition of providing cutting-edge technology to the United States Armed Forces and its allies. Right? It relies on enables military forces to interact with data from all sensors and sources through a single point of access. With one coherent model, users can discover previously unseen links across the entire universe of data. With Palantir software, military forces can rapidly turn mountains of data into plans of action. Foundry is essentially the same thing, but for commercial. I mean, that's essentially the same business, but applied to commercial. What's interesting is that whether you have a competitive advantage on the battlefield, right? If you achieve your mission on a battlefield, or whether you have a competitive advantage in business, that's kind of the same thing. At the end of the day, is you need to defeat an enemy in the case of the army, and defeat a competitor, or beat your competitor in the case of a company. So you can see how it's applicable, and I do believe a lot of software of Foundry has its roots and its foundations in the software of Gotham, which also may explain why they can't or they won't just sell Foundry to anyone, right? Or they can't have a free version, because obviously there's probably a lot of controlled parts of that software that they don't want to get out. So that's probably why they don't have a free version, and they have a top-down approach to sales. And again, so their goal is really to provide the best technology out there. This is an example of some of the products that we've been getting into, actually. So they do trucks now. They equip trucks. They do hardware, right? They do. This is a SkyKit, which is like kind of a rugged computer. They do cameras for soldiers. They do drones, and all of this hardware embeds their technology. And their software is very good from what is to be understood or said. Actually, you often hear the CEO say, if people had only any idea of the things we do, or we can tell you what we do, but we are so important, right? The CEO lacks no confidence talking about Gotham, right? Their mission statement is to be a mission partner for the US and allied nations. So what have they done? What has Gotham done? What do we know? What are some of the examples of the successes that they've had? Well, let's look at some of them. For example, very serious sources consider, whether it's Stanford engineering and management students, or whether it's the Times, right, a famous UK newspaper, many sources consider that the software was instrumental in finding bin Laden, right? So that is an accomplishment that you can put on a website and really sell your software to governments. There's over evidence that the software has a tremendous impact. This is an article from India Intelligence Agency, a newspaper for the India Intelligence Agency, and they show about Palantir fighting terrorism in India and having a tremendous impact. This is another article from The Wire who talks about Palantir has a God's eye view of Afghanistan, and in fact, a lot of people are rumoring that Palantir had a great impact at evacuating Kabul back a year and a half ago. So this company is secretive, and they do a lot of things, and you'll never really fully know, and you'll never really be able to fully confirm what they do. It's secretive. But nonetheless, a lot of investors seem to think that the military business, and I'm talking only about the military business, is very important. And this is from the Wall Street Journal from January 2015, talking about Palantir. So you can see Alex Karp was much younger, saying Palantir had raised at a value of $15 billion in November 2014. And they were raising in this article at $20 billion. And that price for the company was prior introducing Foundry, or prior talking about any commercial business plans. The company was valued at $15 billion. And guess what? Today, it's valued at just under $15 billion. So if someone is interested in buying Palantir, the price you pay today is the same price as November 2014. One can't really say that Silicon Valley markets or VC markets were frothy in 2014. They were not frothy yet. I mean, you can say something about 2021, even the late 2010s, but 2014, we were still pretty close to the Great Recession. They were not that frothy in 2014, and they were valuing Palantir's government business, these VCs. They were valuing it at $15 billion, so very impressive. And it almost makes me wonder if a company would have a greater valuation if it was a pure play military contractor and if it did not have Foundry, which is why I would have no problem with a company splitting. Because if a company split and you own the stock, my guess is that the association with software and with a big data software stock, that association would go away and the company would be valued like a contractor, like a military contractor, and then Foundry can go on its own and be valued as a software company. It really makes me wonder that because back then the valuation was really high in 2014. So it's as if the company hadn't moved in 9 years right now. It's as if the value of the company has not moved in 9 years. And obviously that's not true. Obviously, this company is much more valuable today, much bigger today than it was 9 years ago. So let's talk about the company's size and let's try to estimate what it would be like if we didn't have commercial. So, because commercial is growing slower, actually, if you look at the last investor presentation, they kind of hid the non-government business. They didn't have a chart for it. That's because it grew smaller, but they give us enough info to calculate. So I recalculated it. So between Q1 2021 and Q3 2021 and Q3 2022, the government business, i.e. Gotham, grew at 26%. The non-government business, i.e. mostly Foundry, grew at 17%. And the firm as a whole grew revenues for the trailing 12 months at 22% revenue growth. So not as high as I expected and not as high as I think a lot of people expected. And so it's important to not be in an echo chamber. This is not nearly as high as what I expected. I think Foundry is perhaps a little early. Nonetheless, now that we've calculated this, let's assume that the non-government business does not grow anymore. Let's assume that it stays entirely flat. So I'm going to assume that non-government business, they don't lose customers. I mean, they could, but I assume they don't lose customers and they don't gain customers. They just stay flat. And in that case, I'm also going to assume that the government business keeps growing at 26% a year going forward, or say 25%. That wouldn't change much. And so that would be the revenue growth for the whole company in 2023. You'd have 15% growth. If the non-government side of the business, i.e. Foundry, did not grow in 2023, you would have 15% growth And actually, over time, if Foundry just doesn't ever catch on, and the military component stays, it's going to take a much bigger part of the business, such that it would be 20% of 20% revenue growth would represent 20% revenue growth in 2027. So the government side of the business is going at a pretty nice 26% average growth rate. So anyways, now what do we have as a company? We have a large military contractor with revenue growth of 15 to 20%, depending on the year you look, and a flat-sized commercial business. And how should that be valued? Well, next year revenue growth 15%. Next year gross margin are still 79%, and the enterprise value is $12 billion. Is this a good investment? Is this cheap? And this is the point of the whole video, which is me comparing the valuation of Palantir with other military contractor. And so here it is. Palantir appears to me like a value play in the defense space. If I am to compare, and these are the metrics that I use for all of my growth stocks. If I am to compare those metrics compared to Palantir, I mean, you can see that there is literally almost no growth for Lockheed Martin, Raytheon, and General Dynamics. They have close to no growth, while Palantir has 26% growth in the government business. But if you assume that the Foundry stays flat, they have 15% growth, which is very, very high. Palantir also, in my opinion, should deserve a much higher valuation because it is a software business. The gross margins are insane. Try making tanks or planes. Those gross margins are not good at all. They're like the gross margins of bad hardware. So these are not very, very good gross margin, right? These are not Tesla gross margins. These are not Apple's gross margins. So this company should be trading at much more than that. And so if you compare my metric, it's only trading at 9 times trailing 12-month gross profits, while Lockheed Martin, Raytheon, or General Dynamics are well above 10. All of them are well above 10, even 15 for Lockheed Martin. Enterprise value to forward gross profit. This is where it gets even better. Even better for Palantir, because now you're getting at a 7.46, while the other companies barely budge from the stats that they had this year. Why? Because the growth rate is so tiny, and you almost have to wonder if they'll hit that. I mean, it only takes a bad quarter for you to miss those estimates, and then you have negative revenue growth rate. And then how much are you paying for growth? Kind of price to sales to growth ratio here, and you're well under 1 on Palantir. So Palantir to me is a value stock at this point, and the other companies I would absolutely not be interested in. So Palantir looks like the value play when valued only as a defense company, and Palantir also looks like a growth play in the defense space. It is a growth play because it has 15%, while the other ones have almost no growth. And 15% a year on the military without Foundry, just on the military, is great. And the market is granting zero credit to that. Right? That's a great revenue growth. 15% revenue growth in defense is like Woodstock. Essentially, it's amazing. It's amazing revenue growth. So in conclusion, I am happy to be an investor in Palantir, even though I'm not happy about the stock price and I'm not happy about the Foundry numbers. I am happy, feeling safe about the fact that there is a margin of safety in this stock with the government business. The government business, I believe, provides a floor for Palantir. And even though that's not the type of business I would be interested to be invested in Foundry, if Foundry fails, I will not lose all of my money. If anything, I'll get it back because the government business is undervalued, in my opinion. So if anything, just on the government business, this company should be valued at a much higher price. Thank you so much for watching. This was not investment advice. This is just entertainment. Don't forget to like and subscribe, and please follow me on Twitter at BitVedenominator. I really appreciate all of the follows. Thank you, and have a great day.